Hey everyone, welcome back to my channel. Today we are going to talk about something that frustrates a lot of traders. Why does the trade always goes against me? If you ever felt like the market is out to get you, you're not alone. Let's dive into why this happened and how we can fix it. Ready? Let's go. First, let's talk about ignoring market trends. Imagine swimming against the stream in a strong river. It's exhausting and mostly ineffective. The same goes for trading. When you trade against the market trend, you are fighting a losing battle. Let's say the market is in clear downtrend, but you decide to buy a stock expecting a reversal. More often than not, you will end up with losses because the market continues to move downward. To avoid this, always check the trend before making trade. You can use tools like moving average or trend lines to identify whether the market is going up, down or sideways. Trading with the trend gives you higher chance of success. Next, let's talk about timing. Poor timing can turn a good trade idea into bad one. Entering a trade too early or too late can make a big difference. Imagine you see a stock that rising quickly and you jump in without checking if it's the right time. Suddenly the price drops and you are in red. To refine your entry and exit points, use technical analysis. Look for support and resistance levels and use indicator like RSI to get a better idea of when to enter and exit a trade. Remember, patience is key. Now, let's discuss stop loss orders. Not using them is like driving without a seatbelt. If things go wrong, you are in big trouble. Say you buy a stock expecting it to go up, but it suddenly tanks. Without a stop loss, you could losing lot of money. Always set a stop loss order to limit your losses. Decide in advance how much you are willing to lose and you set your stop loss at that level. This way, if the trade goes against you, you are protected. Over leveraging is another big pitfall. Using too much leverage can amplify your gains, but it can also amplify your losses. If you use high leverage and the trade goes against you, you could lose more money than you invested. It's like betting the farm on one horse. So use leverage cautiously. Stick to a level of leverage you are comfortable with and can afford to lose. Managing leverage properly helps protect your account from big losses. Lastly, let's talk about discipline and patience. Impulsive trading usually lead to bad decisions and losses. If you jump into trades without a plan, you are gambling, not trading. This often leads to quick losses. Having a trading plan and stick to it. Take your time to analyze each trade and don't rush into anything. Remember, trading is a marathon, not sprint. So, there you have it. Some of the main reason why trade often goes against you and how to avoid these pitfalls. By following the market trends, timing your trades well, using stop loss order, managing leverage, and being disciplined and patient, you can improve your trading results. If you found this video helpful, give it a thumbs up and don't forget to subscribe for more trading insights. Until next time, happy trading.